right, Bitcoin's a big story here. We've got Elon Musk tweeting. We've got Paul Tudor Jones saying some positive things. Broke through 40,000 for the first time in over 2 weeks. What levels are you looking at here for Bitcoin?
Well, first I want to say it did hold support really well. And the way I was looking at about 32,000 was a wedge pattern that was building from January. And that's really the apex of that pattern. Came in as support, and the market never really closed down there. It left good tails, so to speak, and that helped bring this thing into a nice rise. 47,000 to maybe as much as 50,000 gravitates toward the round number. I think that's what we could see to the upside here. I certainly was a buyer at 32,000.
Yeah, it did get down near that level that we saw just a couple months ago with 30,000 level. So you think that this is probably going to lead, for Bitcoin buyers and bulls out there. It's been kind of languishing in between that 35 and 40,000. Is this a key level for traders to focus on that, hey, it broke through 40,000, now that resistance level is gone?
Well, it did break through 40,000 when it was ricocheting around, stuck its nose above it for a brief time. Yeah, I think it's a good, at least short-term bottoming pattern. A lot of negativity came out, when it first got from 30,000 back up to 40, and then it started failing again. A lot of negativity. I saw people calling for 20,000, people calling for less. You start hearing a lot of that. Some of the negativity is already priced in, and then people are not positioned to the levels they want, and that's how you get a tailwind. That's how markets are made.
Yeah, and I think that confirmation from Paul Tudor Jones basing some assets, some portion of assets in his portfolio towards Bitcoin and gold. So we'll have to see that. But gold, despite falling that falling dollar that we're seeing, gold slipped to over a 3-week low earlier in the session. It's made up some some of that those losses that we saw. Is this a reflection that we're going to see in gold, as it had a couple months where it bounced off of those 52-week lows, but now we're starting to see some rollover here in the precious metal? What are your thoughts here on gold?
I will say when PTJ speaks, people listen, and that was a lot of talk this morning. He was talking commodities up. I think that's a good thing for gold. I think that's a good thing for commodities in general. Obviously, we want to see the Fed hold ground here this week, and I think they will. So I was very disappointed with gold. Thursday, I got excited. I'm long gold. I thought this was it was building another wedge pattern that it was stuck its nose out in 1906 for Friday's session, and then it failed. It just precipitously fell into this morning. We have a lot of support. I write research every single day. My team and I, we put it out. We have you can sign up for it, Black Futures. We have 1, 2, and 3-star levels, and then rare major 4-star levels. So we have major 3-star support was right around 1850. A rare major 4-star, those two type of levels are never that close. Rare major 4-star 1840, and so we had a lot of support in this 1840, 1850 region. Market responded. Is it in the clear? Not quite yet. A lot of resistance in 1870 in gold. Ultimately, I was looking for reasons later on Friday. Why did gold stall after this sort of green light, so to speak, from transitory inflation data? And Congress did come out with less spending, which is bullish for the dollar. The dollar had a strong day, but it was quietly under the radar. Some news services were picking up. Wall Street Journal, of course, always does. But the Federal Reserve's reverse repo operations hit record after record after record every single day last week, and that's a sign of just a lot of liquidity in the market and financial institutions having more liquidity than they know what to do with almost. And that sort of got the taper talk going. As soon as we thought that taper talk was done after transitory inflation numbers, then the taper talk was sort of there as an undertow to the market, undertow to gold at least, in the dollar rally. And that's also why the S&P and NASDAQ, I think, didn't break out. Fridays have been really great for the S&P and NASDAQ, on momentum-wise. And to see the S&P set a new all-time high on Friday and really not follow through with really good strength was somewhat concerning. But now I think we can understand why.
Yeah, and to that point, the S&P 500 did hit record highs last week, but at the same time, it was only up about 0.3% on the week as it kind of just ground to the levels that we saw into the close on Friday. But another commodity you wanted to talk about here, Bill, is oil. Oil's flat, but did hit those 2.5-year highs, more than 2.5-year highs, above $71 a barrel. Big psychological level. What are your expectations going in for crude? summer driving season, but we saw gasoline inventories kind of build last week in the API and the EIA numbers.
Yeah, that did try to pull the market down, that big gasoline bill, because gasoline demand is, especially this time of year, is the bellwether for this market. And I've sort of been able to kind of look past where we get a peak Memorial Weekend, where the market sort of rallies into Memorial Weekend. This is just a tremendous bull market right now, and you see the TSA numbers. You have that demand coming back, 2 million on Friday, 2 million on Sunday as well. Those are big moves. I'm targeting 77 in crude. Now, I did go outright bullish on our research on Friday, but as well as the market strengthened into the weekend, I took all my crude oil futures off. On the futures side, I was flat because I wasn't sure what we were coming out of the weekend with an Iran news, and the fact that that's been continued delay of Iran elections on Friday. It looks like that's kicked down the can kicked down the road a little bit. So that's been a tailwind pushing crude a bit higher. But you got to stay nimble. Is that news? We can start seeing headlines anytime. Overall, again, looking for $77 in crude. I'm still fully allocated in energy space. I think there's been continued inflows on the wealth or portfolio side, as well as an investment advisor. A number of energy stock names from Chevron, Exxon, Pioneer, as well as Marathon. I think this is a good place midstream, really good in the midstream. I'm looking for pullbacks in the futures, though, to reposition in crude oil, and I think we're going higher. I mean, I said with Ben a month or two ago, $100 could be in the cards, and I still believe that over the next 18 months or so.
Yeah, and I saw some other calls for about $80 a barrel out of Goldman and some others. But if you were in Chicago like I was this weekend, Ben, people are driving. So I don't know how those gasoline inventories rose so much, because everybody was out this past weekend. But kind of wanted to turn them to treasuries and yields. 10-year back to 1.5%. Fed meeting due. Are you expecting any volatility here? Because, if you looked at that CPI data last week, we've got the PPI tomorrow. You would have thought that, hey, we're going to see a sell-off in bonds. We're going to see yields back to 1.75% or something. But that didn't play out at all.
Yeah. I started off one of my daily commentaries on Thursday afternoon saying, this is like a video I do. I say, if I told you had this type of number, what would you think bonds have done? Would you imagine them rallying by the end of the day? No. And that ultimately we weren't surprised, though, because everything we've been talking about is these numbers are transitory. The components from used car prices, airfares, these things cannot continue to pick up at the pace. So what we're going to end up seeing is them being a bellwether for the number now. But as we look a couple of months out, they're not going to continue to rise. And these month-to-month rises are it can't continue at this pace. Overall, though, I think that it's not a surprise to see yields lower. I think it was a relief. I think you have portfolio managers and traders really, seeing this as a green light now that the inflation can't stay at this pace. What's driving it? I think the Fed stays patient. They've been telling us. I applaud the Fed. They've been extremely patient. They've been right all along. I think they really want to look for inflation that is in the July and August numbers that we get in August and September. And that's what they're trying to hold off for. Because if we see inflation like we saw last week for the May numbers, if we see those numbers for July and August, that's going to say this is more than transitory. But for the time being, I think this is transitory. And the Fed, remember, they said they want to be behind the curve. And they said that they announced that symmetrical inflation targeting last year. I think all of this plays into their hand in being patient until we see what those inflation numbers for July and August are when they're released in August and September, which, by the way, that September Fed meeting, it's at the end of September after CPI.
Yeah, and I think, there's been some commentary out there from Mohamed Al-Arian, Paul Tudor Jones earlier today saying, hey, this stuff's not transitory. It's going to last. Restaurants aren't going to start lowering their prices. This isn't going to be transitory. So what's your take on that if you think that maybe the Fed has been right? And I think the market initially thought they were going to be wrong, but it's playing out to that scenario. But, are these price hikes that we're seeing due to whether it's employment, supply shortages, material costs, are those going to last a little bit longer than the Fed thinks?
Well, you made a couple of good points here, and I do think that this inflation we're seeing right now, a lot of it is transitory, but it's going to be, I mean, these numbers, these are hot numbers. And the components driving these hot numbers cannot continue to pick up at this pace. Yeah, there is room for airfares to rally into where they were right before pre-pandemic. And I think, too, there's still some tailwinds behind the cars. But ultimately, what you're going to see in July and August are higher base comparisons. And I think that the month-over-month numbers that we're seeing from April to May, we may get a little more from May to June, but they're not going to be able to stay at this pace. We're going to see 0.2, 0.3, higher, as what I imagine from month to month as we move into the end of the summer. And then the base numbers are higher. So by what the Fed's saying, the inflation's not hot by their metrics. They're okay with it running above 2%. I think what we're going to find is inflation, like the CPI, core CPI, going to be in the ballpark, around 2.5%, which is okay for the time being. And then it allows the Fed to be patient. But as we all know, I mean, lumber prices have, through the end of last year to the first part of this year, massive moves. Crude oil, massive moves. Food, energy, I mean, big moves overall. I mean, but they're not in the core numbers. So I think the inflation per se to hitting people's pockets is real. It's going to hit it. But by the Fed's metric, it allows them to be patient, which is just keeps the party going, the Kool-Aid's going.
Yeah, and I think it kind of pivots them to that employment part of their mandate because they, like you said, they're allowing inflation to run above 2%. They actually want it to run a little bit hotter.